We're going to turn now as well to Mark Zandi. He's chief economist for Moody's Analytics. Mark, we've got tons to talk to you about in the next hour or so, but I want to just right off the bat dig into these figures. Mike was talking about perhaps a discrepancy between ISM and those early ADP figures. How do you read this?
Well, ADP probably has a seasonal adjustment problem in the month of December, so it's overstating the case. But even if it is half right, that would be consistent with payroll employment of somewhere between 150 and 200,000. And that's a pretty good number. That if we get that kind of number consistently, unemployment will begin to decline. So I think the reality is we're getting about 150, 200K in payroll employment gains. 150
to 200K. So the bottom line is still momentum forward, though perhaps not the kind of jump that ADP might indicate. I mean, what are you forecasting for Friday's figures?
Yeah, I expect total employment to be up about 170K and private sector employment to be 180K. So government will lose about 10K. So that's right in that 150, 200K sweet spot. I mean, just a technical point about the ADP.
Please.
It represents the number of people that are on business payrolls, not the number of people that are actually employed, because a lot of companies will keep people on payroll to the end of the year, even though they're not working, and then drop those from the payroll numbers in December. So it could very well be the case that this big increase in the ADP number is related more to seasonal issues than anything else.
The new Congress will have a lot of quick decisions to make. First up, how and whether to cut $100 billion from this year's budget. So one big question, what can they do to help? And what will they do that might hurt the recovery? Mark Zandi is back with us now from Moody's. So, Mark, first day of school in Washington in many ways. I mean, pundits are going to try to say, you can imagine that the extension of the Bush-era tax rate and this payroll tax holiday helped create some jobs momentum. Any truth to that?
Well, I think the tax cut deal that the administration and the Republicans came together on at the end of last year is very helpful. It's a very big tax deal, payroll tax cut, incentives for business investment. I think it will make a very significant difference and will help support economic growth in 2011. So I think they've done a lot of good, and I think it ensures that the recovery will evolve into a self-sustaining economic expansion through the course of the year.
Now, you've already said, when we spoke to you moments ago, that you're expecting about 170,000 private sector jobs when we get that Labor Department jobs figure on Friday. Some of the proposals that seem to be floated right now may, in fact, encourage a change in the corporate tax rate. What would a change on that front do to get corporations to create jobs?
Well, I think that would be a very positive development. I think we need broader tax reform that has a number of different elements to it, one of which would be a reform of our corporate tax code. I think marginal tax rates are too high. We can broaden the corporate tax base, raise more revenue, and still bring down those marginal rates, and that will allow U.S. businesses to compete more effective globally. So I think that would be one thing that policymakers could work on in 2011 that would make a big difference going forward.
Work on it in 2011, but you don't expect to see any change in 2011?
Well, I think that would be a stretch. I think any major tax change has to be part of a broader tax reform. And so, if we got it in 2011, I'd be surprised. I'd certainly take it. Mm-hmm. But my guess is that we won't get the political will to make these kind of big changes probably until the next president, whomever that may be, is in office.
So will we see any real headway then on reducing the budget deficit?
Well, I think, yes, we will, because the economy will improve, and simply that alone will bring the deficit in, that the economy will be growing, getting bigger. That means we won't have to be shelling out as much money on income support programs, and it also means tax revenues will rise. So that deficit's going to come in regardless of what policymakers do going forward. Now, I do think by the next presidential term, the improvement in deficit will begin to stall out, and we will need to see some policy changes. And hopefully at that point, we'll get tax reform and we'll get some real spending changes.
Well, in the near term, we keep hearing about this battle to come over the debt ceiling. GOP saying they won't allow for an increase in the debt ceiling unless they see some cuts in spending. What's the best case scenario here? Where can you see some trims in order for that ceiling to be raised?
Yeah, well, my guess is the president in the State of the Union address is going to lay out some of his own proposals for spending, government spending restraint, and that'll form the basis for discussions with congressional Republicans, and that they will be able to come to reasonable terms, and ultimately they'll raise that debt ceiling limit. I mean, I think it would be a very serious policy error not to do that, and I think everyone understands that, and they will ultimately come to an agreement.
Now, with Mark Zandi, chief economist for Moody's Analytics and a frequent advisor to policymakers. Mark, I was reading your latest report here, and you say headwinds are fading, tailwinds are building. Corporate profits, cash on the balance sheet among the tailwinds, but housing prices you still expect to drop. How much further?
5% between the end of 2010 and the bottom late this year. And it's largely because I expect the share of home sales that are distressed, foreclosure and short sales, to rise. And when that share is rising, obviously those homes are sold at a discount, and that drives down overall prices. So I think another 5% decline in prices is what we should expect. So
when we look at the policy front, and you look at some of the conversations that are being had perhaps about settlement of some of these foreclosure crisis issues, are policymakers, are state AGs going to help in some way create a floor in the near term, or this 5% drop, it's a given for you?
Well, to some degree, to a large degree, the floor in house prices is there because of the policy response. And it's been, in the case of housing and in the mortgage market, unprecedented. I mean, of course, it's the Federal Reserve keeping mortgage rates down through its credit easing. It's the loan modification plans. It's efforts to facilitate refinancing. It's the housing tax credits. It's the expansion of FHA. I can go on and on and on. Mm-hmm. Those things have been very helpful in ensuring that the price declines that we've experienced, while very substantive, are not even more severe. So I think that the housing policy response has been, it's messy. It hasn't been exactly what I would have done. It didn't work out exactly as scripted, but at the end of the day, it did a reasonably good job of ensuring that we didn't see worse price declines.
I'm surprised to hear you're a fan of some of those policies. I mean, we've pretty much only heard criticisms of HAMP and some of the other Obama administration processes. Reasonably good, you say?
Yeah, I mean, HAMP is the one thing I would focus on. Clearly that hasn't worked out according to script, but that's a very difficult problem to get right. I don't know that even under the best of circumstances, we would have gotten a policy in place to solve that issue in a way that people would feel very good about. So of all the policy efforts, that's the least effective. But taken in its totality, I think the policy response has been quite good. And right now, house prices are coming in pretty close to where you'd expect them long run relative to household incomes or effective rents. And in the context of a housing crash, that isn't too bad. That's a pretty good performance.
Well, another thing impacting the consumer pocketbook, besides the price of their home, is the price of what they pay to feed themselves. UN out today saying the price of food up 25% around the globe. We've got oil predictions in triple digits for the new year. How is that going to perhaps dampen some of your optimism?
Well, clearly that's a constraint. I mean, the gasoline price is now $3 a gallon plus in many parts of the country. But overall inflation, when you consider all goods and services, is still very low. 2.5% year-over-year growth. And so I think that is digestible, manageable, just as long as we get the job growth that I anticipate. I really expect businesses to ramp it up here. They're profitable, strong balance sheets. It's really, there's no impediment now to them hiring. If we get that kind of hiring, then I think we'll be able to digest those higher gasoline and food prices reasonably well.
Real quickly here, one boogeyman you think continuing is sovereign debt crisis. When do you expect Portugal to take a bailout?
Well, I think we're very close. I mean, I think the key there is that the German and French officials will have to step up and do more, increase the size of the bailout fund, allow the European Central Bank to purchase more sovereign debt, go through some really substantive bank stress testing. If they do those things, and I think they will do those things, we'll be okay.
All right. Thanks so much, Mark, for sticking with us there for such a long time.
Thanks,
So
Margaret.
great to get you to talk about so many topics today. Got to leave it there, though.